and that's going to be Kevin Green. He's going to join me to help set up the action for today. Kevin, give me your take here. 20th record high close for the S&P 500. On Thursday, it seems like nothing's going to stop this rally that we're seeing. And I think one of the key things, Kevin, is we've seen a real broadening out in this market rally, especially on the small cap side, with most of the major indices at or near their all-time highs.
Yeah, I would agree with you. And even when we do have pullbacks here, Tom, you do see kind of this rotation trade kind of stalling us out and actually providing us a little bit of a foundation of support here. And we continue to hold up when it comes to the technicals. And you're right, when you're looking at the mid caps or even the small caps, they are doing fairly well over the last couple of weeks or so. And that's also being driven by the financial sector, which is actually showing some pretty good relative strength here compared to maybe some of the other sectors that are out there. Obviously, we had the NVIDIA news on Wednesday, the earnings announcement. We did see NVIDIA kind of pull back or at least gyrate yesterday, but you did see also a lot of the other Mag 7s really pulling the weight or offsetting maybe some of those losses. And then the software trade when it comes to AI is starting to gain obviously a lot of fuel. You had MongoDB moving aggressively higher, Snowflake as well, and as well as other names that have some software exposure. So maybe we're also kind of going through this AI cycle from infrastructure now to software, customer focused, customer centric type of operations here, and that's what the market might be paying a premium for. We have to be mindful though, September is actually a very tough month. A lot of volatility generally that we see. I'm not sure if that's going to happen this time around here, but we've had a really nice run hitting all-time highs. Let's see if we're going to be able to continue this trend throughout the rest of this year.
Kevin, you made a good point there. If you look at the financials, those hit record highs yesterday as far as the S&P 500 sector there. Consumer discretionary doing really well. The consumer seems to be holding up this economy pretty staunchly at this point. Jobs market's pretty robust. We got that jobless claims data that continues to be low. Now, the Fed said there's cracks in the jobs market, and we saw it from non-farm payrolls, the revisions down for the last 2 months previous to what we saw in July. I mean, is that going to be the key here moving forward? Is that, hey, as long as the jobs market stays robust, the consumer's still out there spending, that, hey, the push into risk assets isn't out of the norm of out of the realm of possibility here into a historically volatile month of September.
Yeah, I would agree with you. Also, we had that Fed meeting in September as well. And so if they're not going to really pivot from this strategy of the least cutting out at 25 basis points in September and potentially another one in December here, if there's still optimism that we're going to see aggressive rate cuts over the next 6 months, even given the growth that we are seeing. GDP numbers came out yesterday that were obviously strong, a nice little snapback quarter to the upside when you're looking at Q2. But if we still have the consumer for the most part intact and you have inflation still at these elevated levels and you're cutting rates in that environment, then yes, that's kind of conducive for additional risk on sentiment. And that's where you start seeing the broadening out. Outside of tech and communication services, you start seeing some of those other cyclical sectors like financials really outperforming, small caps trying to catch a bid here. Now, any reversal of that type of policy is, let's say we have a massive revision to the upside for the September jobs print, that probably puts into question not the September cut, but maybe the December cut. That could also lead us to maybe some volatility in the equity market just as a whole. We are now in an environment, Tom, where bad news is kind of good news when you're looking at the interest rate front, especially when it comes to labor, and anything that kind of shifts away from that. And we've seen these type of dynamics before. They can actually last a fairly long time. So I'm right there with you. I think right now it's the environment and the outlook of trying to have risk on, and until the market actually gets concerned about the cutting of rates in a high inflationary environment and labor market that's holding up, I think that's actually bears fruit for a lot of these other risky assets like mid caps.
Yep. The expectations for at least 2 cuts so far into the end of 2025, about 85% chance of a rate cut in September. And that's kind of lifting. It doesn't even matter that even if we don't get that September rate cut, due to the data that's going to come out, the expectations of rate cuts and easing monetary policy has supporting stocks. Now, Kevin, you look at some of the earnings that came out. Dell beat on top and bottom lines. Pretty good guidance given, but you better hit every metric in every outlook, right? Because this stock's getting pounded about 6% today.
Yeah, we are seeing a drawdown. I would say for the current quarter, they did report actually some decent numbers. There was one area of the market where they did kind of miss and provided some, let's say, uncertainty when it came to the outlook. Revenue actually did come in at $29.7 billion. Street was looking for around $29.1 billion, and the EPS came in at $2.32. Street was looking for $2.30. AI server strength and continues to rise here. If you're kind of looking at the servers and networking business, growing by 69% on a year-over-year basis. But the Client Solutions Group came in a little bit light at $12.5 billion, and also storage revenue came in also a little bit light, actually seeing a contraction of around 3% on a year-over-year basis. Their guidance for Q3 is the reason why we are also seeing the stock a little bit down here this morning. Their guidance for Q3 EPS coming in at $2.45. She was looking for around $2.55. Revenue did exceed the Street's expectations here, though. So a high bar. AI Group is doing really well. They continue to see a fair amount of growth there, but it's not offsetting some of these other pockets within their markets. And you're still looking for that PC refresh cycle, Tom. That has not happened. Just like the phone refresh cycle has been kind of delayed as well. That's also kind of impacting their growth over the last couple of quarters and even the last couple of years.
Yeah, AI doing well, but some of the other segments within the business not doing well. Another stock on the downside here, Kevin, got a downgrade today, too, out of B of A, and that's Marvell Technologies. I mean, this stock had been under pressure. It was down 30% so far in 2025. The bar was low going into this, but there's no real clarity on the guidance on their AI build-out at this point. Is that right, what you're looking at here?
Yeah, they're basically saying that the demand for their ASICs and custom technology here is a little bit erratic when you're looking at the hyperscalers. And when you're looking at the data center revenue, that did actually increase 69% on a year-over-year basis and actually did miss the Street's expectations. That was actually one of the bigger concerns here. Their outlook also was a little bit of a problem. Revenue for the company came in at $2.01 billion. That was in line with the Street's expectations here. But once again, they did see a major negative surprise when it came to the outlook for Q3, really talking about the hyperscalers and the fact that their business is kind of volatile when they're looking at demand and placing orders, and that's having a direct impact on their business. We know that Microsoft actually did report that they're delaying their in-house AI chips. That's obviously going to impact Marvell. And then you're looking at other companies like Amazon that are looking at other sources and other methods in order to build out their AI infrastructure here. Now, they did complete the exit of the automotive segment, so we had to be mindful of that. They sold that for around $2.5 billion. But once again, the ASIC, custom technology here just is very volatile when it comes to the demand, and that's why their outlook came in light, and that's why the stock's getting hit pretty aggressively this morning. Yeah,
B of A, they downgraded the stock to neutral from buy with a $78 price target down from $90. They cited the uncertainty around their new projects with Microsoft and Amazon contributing to the uncertainty, I think, for the outlook for this company. Even though AI is ramping up, not everybody's going to be a winner in this space. Kevin, when you look at the S&P 500 as a whole, as I mentioned, hitting those record highs, the rebound that we've seen in the Russell, NASDAQ 100, and Dow just off of their all-time highs. We're seeing some weakness here today. What kind of levels are you watching into this long holiday weekend?
Yeah, so we have to be mindful that this is also going to be month end, so we will see a rebalancing that'll impact the mid caps and small cap companies. So look into the close to see some volatility there. Looking for the first area of support at 64.50 to the upside. I'm actually looking at 65.35 as an area of resistance. The trend on the daily time frame continues to be fairly strong here, Tom. And and unless we actually break below that 6,200 level, I think this bull trend probably will continue over the long term.
Yeah, we'll continue to watch that. We got that PCE data coming out this morning. It seems like the market's just kind of pushing aside the grind higher that we've seen in inflation and focused more on the jobs market, but we'll continue to watch that. All right, great stuff. Thanks to Kevin Green, senior markets correspondent here, helping us break down the equity markets heading into a long weekend.